Hi, I'm Rick Kaler. Thanks for joining me. Almost every politician running for president or Congress refers to the alarming growth of the national debt. It's pretty reasonable. It's now at $23.2 trillion, or $188,000 for each individual taxpayer. Democrats blame the recent run-up of the debt on Republicans, who've controlled the Congress and White House. Not many years ago, it was the GOP blaming the Democrats who controlled Congress and the White House. For my entire adult life, I've heard politicians on both sides of the aisle warning of an economic Armageddon from the growing federal debt. Whether they are warning about or defending the debt depends on whether their party is in power. Such inauthenticity can understandably leave much of the public apathetic and completely untrusting of what politicians say. Now, most Americans understand that no individual, corporation, or government can sustainably continue spending more revenue than they receive. It's also not hard to understand that the only way you can spend more than you receive is to borrow. As debt grows, eventually lenders, which could be credit card companies, banks, investors, stop providing new money that keeps the entity afloat because it becomes too burdened with debt, a poor lending risk. So when they shut off the flow, the loans come due and bankruptcy ensues. Now, this is true for every individual, corporation, and government entity in the country, except one, the federal government. And the reason is simple if you think about it. Only the federal government owns a printing press. Now, this means the federal government can never run out of US dollars. And I'll paraphrase that to USD for US dollars. The Treasury can borrow all the USD needed from the Federal Reserve, which creates the US dollar. And they can use that to pay for entitlement programs, interest on the debt that's maturing, and anything else denominated in United States dollars. Now, they can't print euros, they can't print Japanese yen, they can't print British pounds. But so anything denominated in dollars, the federal government cannot run out of dollars. So for the federal government, the risk from excessive debt is not running out of US dollars. The US federal government cannot go bankrupt. So you're probably scratching your head right now going, something sounds wrong here. Well, what's wrong is the risk is inflation and devaluing the value of the US dollar against British pounds and the euro and the Japanese yen. So the risk is inflation. The risk is becoming the next Argentina where your currency is worth nothing. But the risk is never going bankrupt for the federal government. So if you can grasp this one basic point, you can start to understand something that many politicians don't grasp. It's one of the major reasons our federal debt hasn't resulted and won't result in the bankruptcy of the country. And also, printing money is not part and parcel of creating high inflation. Case in point, look at the last 10 years since 2008. I think we've printed over $4 trillion. Do we have high inflation? No. So there needs to be other things that are present in the economy to really ignite inflation or hyperinflation. So this doesn't mean that excessive debt is nothing to be concerned about. Again, the risk is inflation and the federal government managing the creation of the money responsibly. But politicians persist in calling for spending cuts or tax increases to tackle the federal debt problem. Rarely does either one actually happen. Given the size of the current debt and politicians' belief, maybe rhetorically or disingenuously, in the need for tax increases or cuts in spending, I believe a tax increase is probably in our future. A January 30 article by Rick Newman at Yahoo Finance looked at some of the proposals. One is a new inheritance tax. Proposals would reduce the current amount exempt from federal estate taxes from the first $11.5 million of a deceased person's wealth down as far as $1 million. This could mean $92 billion in additional taxes collected. Second is a wealth tax. Democrat presidential primary candidates Elizabeth Warren and Bernie Sanders support this idea. 4 wealth tax variations proposed by the Hamilton Project would tax those with net worths in the range of 8 to 25 million. Each option would raise approximately $300 billion annually. The third is a value-added tax. This taxes goods and services at various stages of production and is popular in many developed countries, especially in Europe, despite raising prices for consumers, which it will do. A VAT of 20 to 25% is pretty common in Europe. A 10% VAT tax in the US would raise around $1 trillion a year. And the fourth is a financial transaction tax. This would raise costs for investors with a levy on all trades of stocks, bonds, ETFs, mutual funds, and derivatives. They talk about a 0.1% transaction tax, which sounds low, but when you start adding it all up, that would raise about $60 billion a year. So the bottom line is that some form of additional taxation is probably coming after the election, regardless of which party is in control. Just don't expect federal spending to be reduced or any tax increases to be applied to the federal debt. Either one rarely happens, regardless of politicians' rhetoric. Thanks for listening.